Friday, I was looking for another IWM credit spread that I could just scalp. I do 7-day credit spreads on these, typically when it's coming down, and because a lot of other trades weren't working as well as I wanted them to, and I was fighting with them, I wasn't getting a lot of the closes that I wanted this week. So I was trying to find a way to bring in some more income. And when the market's right, especially with the VIX is up, these little credit spreads on IWM have worked out really well for me. I'm on a weekly chart right now, and I'm going to go ahead and draw a Fibonacci on the weekly just to have that on there for us as we go to the daily chart, and I show you where I entered this trade. You could see that we'd already had some retracement here, and we had the 127 was down here at 162.22, and then really you had good support, it appeared to me, right in this area, and I'm going to switch to the daily chart and kind of explain how I was looking at this trade. So we had this big down candle here on Friday after an up candle on Thursday. So this is the 17th, and this is where I entered the trade, and I sold the 163 put. Sold the 163 put here, and I bought the 153 to cover it. That way, if the bottom did fall out, the amount I could lose was capped. My plan was really to hold this over the weekend and Monday see if I could get out at a profit. The market did fairly well Monday, so I stayed in it until today. If it had broken below this level here, I probably would have just exited the trade at, gain, loss, break even, whatever it was, because it's kind of like trying to catch a falling knife with the way the market's acting lately. And if I had already decided if we broke 170, because that's also a whole number, that I would just close the trade and be done with it. I held it till today, Tuesday, and it had come up in this area when I finally decided to go ahead and sell it. I got a good profit on it. The reason I sold it is because we have the Fed meeting tomorrow, and I'm not sure what's going to happen there. I had a great profit here. It had come up into this area, which probably got resistance in this area here. So it just made sense to go ahead and close the trade and take my profit. Let's go ahead and take a look at the trade sheet. Taking a look at the trade sheet here, one thing I didn't put on here was the implied volatility, which is actually VIX. That's what I use when I'm trading these. I think it was at like 25 or so when I entered this trade, and today it went down to, I believe, 22 when I got out of it. It's important on this particular trade to have that. I just failed to put it on my trade sheet. But you can see that, as I said, I sold the 163 puts, 5 of them, and bought the 153s to cover it. So it gave me a total risk of about $46.83 on this trade. Got into an 81-cent credit. I got out of it for about a 15-cent debit. A lot of times I'll hold these till expiration and just take the whole profit. But I had such a high amount of it just 4 days in on a 7-day trade. And with the Fed meeting tomorrow, to me, it made sense to go ahead and close it, take my profit. If the Fed meeting tomorrow makes the market go down, then Thursday or Friday, I'll probably enter another one. If the market goes up, then I have the option of just waiting for it to come back into my area where I want to sell these, or I could even sell a call spread, feeling that the market may pull back. So I have a couple of options this week is after the Fed announcement. If it does pull back Wednesday afternoon, Thursday, I will evaluate it Friday and see where we're at, and it kind of depends on where it's at and what kind of support I think that's out there before I enter another one. But I really like to enter these on Friday for 7 days out and take that weekend theta time decay and look and evaluate it Monday and see what kind of support I'm getting, then make a decision. Do you get out for a small profit, or do you hold and wait and see what happens? Every day that goes by, you're making money as long as the price isn't rapidly falling. So these are good little trades to get into, but you got to pick your points. Obviously, you don't want to sell a put spread like this if the IWM is hitting the top of the Bollinger Bands, or it's above the 21-day perhaps. You want to wait for that pullback. You preferably have a higher VIX, so these trades are more profitable. If you have any questions, let me know. Put them in the comments below. Please like the video and subscribe to the channel if you like what you're seeing. And if there are other types of trades you'd like to see or have me evaluate, let me know that. Thanks for your time.